What's up, guys and ladies? This is Carter Thomas with Coin Mastery TV. Make sure you go to coinmastery.com/invest. Get your free dollar cost averaging PDF guide and newsletter series. Great, helpful tips for anybody just getting started, as many people probably are after this wild Thanksgiving weekend and massive run to the Coinbase accounts to get them set up. Today, what we're talking about is a lot of bigger picture pieces. I think that this is something that has been on my mind. I think it's been on a lot of people's mind in the crypto community. And I think that this will be helpful for anybody who's looking around being like, oh man, we're getting up to the top. And the reason why this is really important, at least in the context of Coin Mastery, in terms of this journey, is that this is exactly the position that I told myself I needed to be auditing when Bitcoin was trading at 1900. And so I'm trying to be as objective as I possibly can, as if I don't know what I know now. In other words, I may feel like, hey, this is going to $50,000 tomorrow, but I need to put the time and the thought into being as objective as possible. So the reason why we're doing this is so that you guys can step back from everything, from your trades, from the market, from what you're seeing in the social accounts, and hopefully be able to be somewhat objective, see what the market for what it is. I'm not saying that think one is right or the other. All I'm saying is that this should help you get a better perspective. And that's really what that's what the end goal is. This crypto is going to have the biggest year ever in 2018, but the path that we go on is unknown. So that's what we're going to talk about. And I'm going to share with you a bunch of different resources that I found really helpful this weekend, a couple different ways to look at this, and we'll go from there. And a piece of or something that I'm doing that I would encourage everyone to do. As always, guys, this is not financial advice. You know, if you do, this is just what I'm doing. This is my journey. So please contact your local crypto professional. Not that there really are any of those yet, but so it goes. Opening it up, we are looking at Bitcoin. Just looking at Bitstamp for anybody who cares. The only reason why is because it has much longer price history than Coinbase. The prices are relatively similar. And you'll remember last week, we had these chart lines up, loosely speaking, to draw a channel / very, very gradual ascending wedge, I guess. And you can see that there was on the daily candles, there's a big break right around the 22nd. Now we touched, I think, 9,800 this morning as of Monday, November 27th. And we're seeing a little bit of a pullback, so to speak. You know, if we switch this over to the 30-minute, you can see that there's a little bit of a consolidation. And this has kind of been the story for the last few days. The biggest reason why this is happening, as far as I can tell, and as far as everybody I've talked to and that I've been reading online, is that there's just all these people got together. There was a bit of a holiday, and there was a renewed cycle of, hey, I should buy this and not miss it, or whatever it may be, which drove a very, very large amount of people buying in new. Often, as you guys know, the conversion rate of getting people to sign up for a Coinbase or for any crypto account is relatively low. But if you have someone next to you showing you how to do it, it's actually very high. And what better time during the holidays than for that to happen? So, you know, during Christmas time, you may see this happen again for the same exact reason. People are going to go home, and now they're around people and things happen. So this is really interesting. What this means from a charting standpoint, let's switch back. Let's go to the 4-hour, is that I would redraw this more on a shorter term window. I'm not going to do that right now, but you would start to look at this in a new, either with a new channel or with a new ascending wedge. You'd start to look at this price action on a smaller time frame, because you can see this is pretty much straight up, and that always that requires some sort of correction, even if you drill into the smaller time frames like the 1 hour. That's still, there's got to be some sort of pullback at some point. Okay, and I think I'll say this now because I think that this is when most people are going to be listening. For a very long time, I was a holder, right? I bought Bitcoin, Ethereum, whatever else, and I was like, look, I'm never gonna think about this. I'm gonna go forever, not a big deal. And then, like many of you, I allocated some funds and I realized that there's a lot to be said for the volatility, and I started making money. But the one thing that I never actually did for a while was be able to take profits all the way back to fiat currency. Meaning if I bought Bitcoin at 5,000 and it went up to 6, for a long time I was like, oh, well, I made $1,000. This is amazing, unbelievable. But I didn't actually cash it out because I was like, oh, I don't want to pay taxes on it. I don't want to go through the process. I want to be in the market, blah, blah, blah. And what I realized is that there's actually a really, really strong psychological barrier to taking profits, to actually locking in hard gains. And I'm not discounting the tax side of it or that there's a lot to it. But one thing I would tell people in a market like this, in a position like this is not advice. I'm not telling everyone you should do this, is that even if it's only like $50 or $100 or whatever, taking crypto and moving it back into your fiat currency of choice, not Tether, like real US dollars, euros, yuan, whatever you're trading in, going through that process psychologically is really important to do, because when this goes up to 10,000, 15,000, 20,000, it's going to be even harder to make that fiat switch. The opportunity cost is going to feel more severe. And so one thing that I am doing is pulling out like 2%, or not even, I mean, a small percent of Bitcoin, not necessarily because I don't, like I want to scalp a trade. Like there's, it's good to take profits, but more importantly, it's because I know the more I can inoculate myself into that psychological barrier, the more objective I will be as the price goes up. And this is something that seems counterintuitive, that you're going to want to resist, but I can't stress enough. And just do it with a small amount of money. It will make you a better investor. And even if you're a holder, I would recommend doing this. Now, obviously, do what you want. This isn't professional advice, whatever. But something to think about, and something that I've been thinking a lot about is it's easy to look at your account and say, oh, I made all this money, and realizing it hasn't actually turned into fiat yet. And yes, maybe in 5 years, fiat won't matter. I get it. But for now, it does. And that's just the truth of like, that's what you pay your bills in, or pay your taxes in. Until that changes, that's what you need to cash out into. All right. Now, similarly, the altcoin market has had kind of what we've been talking about, right? You're seeing more and more of these individual spikes that are bigger than usual, but they're fewer and far between. So you're going to see these random coins that get these massive pumps, but overall, you're not going to see the rising tide as often as we used to. So you'll just see these big 80% spikes, and that's often why it becomes like a harder game to win when you're trading, or I should say psychologically, because you start to want those be like, oh man, I missed exclusive coins, 30% rip. Why am I settling for this boring coin or whatever? But that's why you really got to know your coins. You got to do your research. You got to stick to it, because if it's a good coin, it will eventually get the volume it needs. I'm not going to spend too much time on altcoins today. We'll get to those later this week, because I think it's really just, it comes down to what's going on in Bitcoin right now. This is where all the action is. So one thing that I think has been an interesting conversation is the market cap in general. right? We're already at 300,000, 300 billion market cap, right? So the overall market cap of crypto is $300 billion. And for some people, that may seem like crazy. I think it was only at 20 at the beginning of the year, and now it's up at 300. Others may say that, something like gold is $7.8 trillion market cap, give or take. So we've got almost 50x to go to meet that. So one thing I do think is important, though, is 300 billion is it is small, but as it grows, so too does the size of the pool of assets. Meaning, just because the market cap gets bigger, it doesn't mean that individual assets grow at that same speed. So the more people that entertain it, the more diluted it gets. And that's why I think that things like research, and whether it be technical analysis or fundamental analysis or whatever, becomes more and more important as this gets realized. We only got, this goes up 300% more. We're at $1 trillion. That's big. That's a real thing. And I think that as the asset classes start to split from that, you got to start to look at what is this? When does this actually start to stabilize? When does the growth really start to slow down? Because, I don't care who you ask, it can't go parabolic forever. At some point, it needs to smooth out. And even if I don't necessarily think it's going to have this huge crash, I could eat my words on that. I think it's going to be more of like it grows and grows, and then it just starts to smooth out, at least for Bitcoin. And the reason I think that is because that's exactly what happened with gold. And when you look at gold, let's say it's a 30-year chart, this is about as close to Bitcoin as it gets in terms of price structure or chart structure and how it's played out. And if you look at what happened with this, I guess you could consider this a bit of a crash over a long period of time, or a couple of years relative to what Bitcoin is. But what you see is a down, and then you see this just basic price stability, right? As opposed to a long-term up and to the right curve. And the reason I'm bringing this up, like I said, this is the kind of thing that I do not want to believe. I do not want to think that this is what's going to happen. But I have to entertain the idea that it might happen. Now, the market cap chart may end up going 5 times bigger before we see some sort of price stabilization or whatever it may be. But this, to me, is a very good way to look at what crypto is doing, just because the chart looks more like crypto than anything else I've seen, especially when you look at the Elliot waves and the way that's played out. So I think it's just, for anybody listening or watching this, is just, you got to be honest with yourself about, yes, could Bitcoin go to 50,000? Absolutely. Will it? Yeah, maybe. It could, like, high probability that it's going to keep going way up. But at some point, it's going to stabilize at some price. And if you are not in a position where you are psychologically and technically prepared to capitalize on that profit, it doesn't matter how big it goes or how low it goes if you don't capitalize on it when the events happen, right? That's the whole point. And that's what I'm trying to, that's what I'm thinking about. That's what I'm really paying attention to these days. And that's why I'm also, not loading up on everything as of yet. I'm waiting for some other fear-driven event to come into the market. A couple pieces of news, or I should say reading, that may be helpful. I think that you guys know I like Josh Brown. I think he's funny, and he does an okay job, or a good job, I should say, at being objective, even though he's in a financial services business, right? He's in the ETF index fund business. But I think he's really good at seeing the writing on the wall in his own business. And he wrote a really good article. And the reason why I think this is really good, is because you don't see a lot of people that talk about what it was like from a market standpoint in 1995, 96, 97, 98, 99. Right? You talk about people who show you the bubble chart and what happens and what happened after it, but this really gets into what people were talking about, like the arrogance of and the status that people got from trying to be right, and the hubris and the exponential growth curves and everything around that. So I think that this sort of thing is really, really helpful, because while the markets always change, people do not. And the more you can study the market sentiments as it relates to different parabolic growth models, the more you can see the patterns, because the patterns in people always repeat themselves. Industries will always change. Speed of technology will change. The products, the assets we're buying and investing in will change, but people will never change. That's just the way dopamine works does not change. So this article I think is really good. I would really encourage you guys to check it out, because he gets into some unique perspectives that I think a lot of people often forget. Similarly, Ari Paul, who I think is a very, very smart guy. I really enjoy following him on Twitter and just in general. He gives a really good piece that compares crypto to the 1994 internet, specifically around email. 94 was when Netscape was launched. I believe that's when Amazon was first founded, like way back. But it just gives you a more of an economic or an investor's mindset of how you can compare this as asset classes, or how you can not compare it, and how much more room we have to grow. And I think that overall, this is just what I've been thinking about, and many people have not. Many people really don't want to think about this whatsoever. In fact, you can go on. Feel free to go on Twitter or on YouTube anytime, and you'll look at the comments, and people just do not want to hear about this, because this time it's different. There's big quotes around that. And that's totally fine. I am as big of a crypto bull as it gets. I believe that this is going to revolutionize the world, change the world, and do everything that we all believe it. I'm just not sure that it's going to happen the way that everyone thinks it's going to happen, because markets do not benefit the masses. They screw the masses, and they benefit the few. Maybe we as early adopters will be that, but I don't know. History would say that that's probably not the case, because we're new to this. And that's why I'm obsessed with the psychology. I'm obsessed with the mindset. I'm obsessed with studying history and the market sentiment and the people, because I want to win. I want you guys to win. And I want us to do it in a way that is more predictable than just blindly believing in this thing taking over the world. So it's a very interesting time. I think that 10,000 is going to be the big tell, right? 10,000 CME future is probably happening right around the same time. We're going to see a lot of action around that. Breakthrough 10,000, we're going to see a huge run up to 12,000. Then it's going to be that's I think when we go into chapter 3, free for all, like 1,000 points a day type of stuff. And that's when it's just going to get totally crazy. Being prepared psychologically for that, being able to press the sell button, being able to, whatever, hang your hat on it, whether it's you walk away or whether it's you exit crypto, whether it's you pull your profits, it's up to you. But something is brewing. The parabolic stuff is really starting to heat up. And that's what I'm trying to help out with. That's what I'm trying to do. That's what I'm trying to capitalize on. So interesting times. Good stuff, guys. I will catch you on Twitter, Carter Thomas. And in the meantime, I will see you tomorrow. Peace out.